Hello, everyone. This is Andrew Berman, and thank you for watching Mortgage Leadership Outlook Broker Edition, brought to you by our friends over at PennyMac Broker Direct. And I'm so excited to kick off this series with someone who I didn't even know was a legend, but has now become a legend since I've learned about him, since I've dug into the world of Jacob Deegan, who's president and MLO with Simplify Home Loans. Everyone, please join me in welcoming Jacob to the Mortgage Leadership Outlook Broker Edition. Jake, thank you so much for joining us today.
Thank you so much for having me.
All right, so there's a lot I want to talk about here. I don't know if we're going to be able to get to everything, but you do have really just like an interesting story. So, I mean, I just can't believe actually at the age you got started in the mortgage business. You're literally the only other person that I know actually that started in the mortgage business, in high school, other than myself. So tell us actually, take us back to the teenage years, to a young Jake that somehow was introduced to the mortgage industry. How did that happen?
So yeah, very interesting story. I was going to be a commercial airline pilot. That was my path. That's what I was going to be. And so I was a senior in high school. I had a job at an outbound telemarketing firm. And at this outbound telemarketing firm, one of our projects that we did was actually mortgage leads. We actually generated mortgage leads, and they were not warm leads by any means. We would call people essentially out of the phone book, and the whole idea was to set them up an appointment with a mortgage loan officer at a local mortgage company to talk to them, give them a quote, see what we could do to save them some money. And so I really gravitated towards that project. We had lots of different projects. We sold Quest cell phones and Dish Network contracts and things of that nature. But I really gravitated towards the mortgage leads because I didn't view it as a sale. That wasn't, quote unquote, a sale. I was like, wow, we're really helping people with this. We're taking people 5% down to 3%, and they can save hundreds of dollars a month on their monthly mortgage payments. What a novel idea. And so I really gravitated to that as in my youth. And so one of the managers at that telemarketing firm actually, suggested, hey, look, have you ever thought of doing mortgages yourself? You seem to really like it. I'm like, I'm just a punk 17-year-old senior in high school. No one's going to trust me to do their mortgage. And so she's like, well, at least meet the guy and, see what you think. So I go and interview with this local mortgage company, and he's, we talk and do the usual interview questions. And his big thing, he's like, we've never done this before. We've never considered having a high school kid, 17 years old, originate mortgage loans. Like, we're really nervous that this isn't going to work out. And I'm like, well, I appreciate the opportunity, and I've done pretty. I'm really comfortable on the phone, and I like talking to people, and this whole concept of mortgage really fascinates me. He's like, well, you come highly recommended, and so let's give it a shot. And so, I would go to high school. I only needed to go a few periods, to get all my credits to graduate. So I would go to high school in the morning for a few hours. And then I was off to the mortgage company for the rest of the day and evening. And so that was kind of my schedule. And one of my funniest stories with that is after a few months of originating, my dad actually got me a cell phone. So I started in mortgages before I had my first cell phone. And I was in my first period of marketing class, and my cell phone starts buzzing in my pocket. And I look at the caller ID on it, and I'm like, oh my goodness, this is one of my clients. And so I raised my hand to the teacher, and I'm like, hey, can I go to the bathroom? Her name was Mrs. White. Mrs. White, can I go to the bathroom? And she's like, oh yeah, sure. Here's the hall pass. Well, of course, I didn't go to the bathroom. I went out to my truck. I had all my files with, all my notes of all my different clients that I had, originated mortgages for. This particular client was at a closing. They were closing in the morning, and they had some questions on their closing documents. So here I am, 17-year-old in high school, in my truck out in the parking lot of my high school, and I'm walking them through the closing documents and answering their questions, and the transaction successfully closed. And so that's a really neat story I would like to share. So,
I just
go ahead.
yeah. I mean, I just said this is like the first time I've ever heard a story like this. I've heard every story to come in, and just listen. If you're watching this, please comment actually the year that you entered the mortgage business. So if you're watching this live, please comment, or even if you're watching this recorded, please comment the year that you started in the mortgage business, or your age when you started in the mortgage business. You don't need to know the year. We don't want to date you, but please comment your age when you started in the mortgage business. Sorry about that, Jake. This is just a fascinating story, and you got me very excited about this. This is. I'm pretty sure you're the first person that I've ever heard of, and probably the last person that I know that asked for a hall pass to go fill out a 1003. That is just phenomenal. So here you are. Actually, so you closed that loan. And you became very, very successful at this pretty quickly.
Yeah, so within a few months at the company that I was working with, I had set the company record for the most loans closed in a single month. At the time, it was 25 units, which was pretty amazing because, like I said, I was kind of going up against a bunch of 30-year-olds, 40-year-olds, late 20s. I'm this 17-year-old, kid that's doing it all over the phone. That's the other thing that was very unique is a lot of these other loan officers that I was working with, they did a lot of their, transactions in person. And I quite frankly wasn't comfortable with that just because of my age. I certainly didn't have the beard back then. And so I looked young and I just didn't think I'd be successful. So I made it a point that, no, I'm just going to do this purely over the phone. And so, within a few months, I had set that company record. And then, they allowed me to bring on people to help me and teach the business to different loan officers. So I built out a team of like 30 different loan officers, and they're all older than me. I'm 18 at the time and managing a team of 30 other loan officers that are all in their mid-20s and mid-30s. So that was very interesting time back in 2003. And then at that point, I started getting really obsessed, if you will, about the efficiency of the process that was manufacturing mortgages. And so I started building out a team that wasn't so much dedicated to, hey, how many loan officers can we get to maximize volume? How can we maximize the amount of loans that we do per team member? That was something that was really, really important to me, is maximizing those efficiencies. And so, with the company that I was with, I kind of moved away a little bit from being like the team lead, almost pseudo branch manager, if you will, for them to be in more like, hey, look, I want to have my team that I don't have a bunch of loan officers. I will be the main originator. Maybe I can have a few originators with me, but I want to focus on the efficiency of the team. And so instead of a loan officer being able to close, 4, 5, 6 loans a month on average, how can we get a loan officer to close 15, 20, 25, 30, not be a rock star? They don't need to be a rock star, but how can we systematically put a system in place to where your average Joe loan officer, so to speak, can start producing consistently 20 to 30 loans a month? And I became obsessed with that. And so for most of the remainder of my career with that mortgage company before I started my own, it was really just mastering that process, really creating an assembly line, if you will, and plugging in the different team members into each of those pieces to build out a really efficient, system. And my very top month ever was in 2012. I, as the originator, funded 140 units because I had this team of assistants and this assembly line put together. And that year I ended up funding nearly 1,000 loans. And so that's kind of one of my most my proudest moments, if you will.
So give me an idea. And so you did almost 1,000 loans. How many staff did you have to be able to do that many loans?
I had about 12. So I had about 12, mainly consisting of assistants who, if you will, specialized. It's kind of like Henry Ford invented the assembly line, right? And how do you become a master at something? Well, it's repetition, doing something over and over and over and over again. And so I found that I'm like, okay, if I can segment this mortgage process from, if you break it up into 100 different steps, and if I can segment this process that, okay, legally as a loan officer, these are the steps that I need to conduct in order to, facilitate the beginning of the manufacturing process of this loan. But after I'm done with that, I can hand it off to this person who can then focus on just these remaining 10 to 15 tasks that need to be done. And if they do that over and over and over again, they're going to become really, really proficient in that. And then same thing, we move it on to the next person and then the next person. And so, I was, as I said before, kind of obsessed with mastering that and making sure that everyone that was in their respective roles really, really understood how to do their role, as best as humanly possible, for lack of a better word.
So how many steps did you define, and and I don't want to ask you to go into how many tasks for each of those steps, but how many steps were you able to isolate?
Each role, if you will, would perform, several different tasks, obviously. But, we kind of have it broken down into about 6 or 7 different sections, if you will, with a specific team member that is assigned to each of those.
Wow. So what do you do to manage to do the project management of each loan? Like what are your tools that you do to make sure actually everything is moving in a assembly line like process that you talked about?
So, our biggest tool is, and this obviously isn't a commercial for Ellie Mae, which, formerly Ellie Mae, now is ICE Technology, but we were pretty early adopters of at the time Ellie Mae's Encompass. I loved that loan origination software and the fact that it's very task-based, very milestone-based, and essentially, that kind of helped plant the seeds, if you will, of this system that I'm talking about, of these different milestones and having an assigned person to each of those milestones. And within those milestones, you can give them specific tasks, documents, different objectives to complete during that. And that's how we were able to keep it organized. I know other loan origination softwares, they don't necessarily work that way. We, when I first started my career, we utilized Calyx Point. And, that's what I knew for a really long time, but Calyx Point didn't really work that way. It wasn't milestone set up. It was kind of like you go in and it's kind of a sandbox, free for all. You can go to whatever form you want, and you can start at the end if you wanted to. There's no real workflow or system behind it, or no organized fashion. And so I really loved how Encompass did that, and it enables you, the tools that are within that software enable you to not only make sure that your staff are on task of what they're supposed to be doing at each step, but also there's tools within that software to make sure that the loan is moving along in a timely manner, and each of those milestones is getting completed within the time frame outlined of when the loan is supposed to be closing. So I can attribute a lot of it to, honestly, our loan origination software Encompass, to being able to help manage and keep all of that organized.
Fantastic. That's great. That is, that's phenomenal to have actually, the tools to not only be able to, to assign the tasks, but to monitor everything. Now, do you actually, what are some of the metrics that you keep to see actually, how well you're performing?
So yeah, we have quite a few KPIs that we keep an eye on, and each of our team members, we try to structure their compensation plans to get the type of behavior, to promote the type of behavior that we want. And so turnaround time in each of those steps is a big one. We know how long each step is supposed to take. And so, and as long as the loan goes along and completes its different milestones in the time frame in which is appropriate, or kind of our company standard, then at that point the loan should close on time. And so the turn time for each of those milestones is a big one. We keep on we keep an eye on. Another one we keep an eye on is how many loans in our pipeline are behind schedule. So we're separated into departments, and there's team leads to each of those departments, or multiple team leads that manage multiple staff members that are engaged in each of their respective milestones. and their job is essentially to be the shepherds, if you will, and making sure that they're going into each of their team members' pipelines every day and checking to, okay, what loans do we have that are falling behind that I maybe need to help that particular team member with, and and kind of address to, kind of give it the extra attention it needs to get it kind of back in line, back in the flock, if you will, back to the the whole shepherd and sheep analogy. And so turn times with each of those milestones is a big one. Also the pull-through ratio. We try to keep a track of, okay, if a loan is assigned to you in a particular milestone, how many of those loans, if you're assigned 10 loans in a particular milestone, how many of those, or what percentage within a 30-day time frame, for example, are you getting completed, right? And so we track our pull-through ratio very, very closely here, not only from a company-wide basis, but it's boiled all the way down to the individual team member basis of looking at their pull-throughs and making sure that we're making adjustments for for those particular team members where it's necessary. Another one we keep an eye on is we want to make sure as we're going through the loan manufacturing process, customer service is obviously huge. It's paramount. If you're not providing a good customer service to your clients, then they're not going to continue to do business with you. Mortgage is not a point of sale type of transaction. It's it is a transaction that is, quote unquote, sold or originated in the beginning, and that needs to be cultivated and cared for 10, 20, 30, 45, 60 days, however long the closing process is. And so customer service is a big thing. So one of the things that, we also keep tabs on is, how many positive reviews because every loan that closes, we invite them to fill out a review, both positive or negative with us. What can we do to improve? What did we do well? Those reviews follow those particular team members in each of those different steps. And so that's part of their compensation. And another one is related to customer service, is making sure that, we have kind of a contact standard that when a loan is in process, we will reach out and update every single borrower in our pipeline at least twice a week. That is the bare minimum contact standard that we have. And so we've integrated through technology, tracking systems for our phones to make sure that every loan in our pipeline is getting that proper standard of contact to ensure that to ensure our clients are being properly taken care of. So that's just kind of a sampling of some of the different metrics and things that we track on a daily basis to ensure that everything is moving along the way that it should, and our clients are getting the customer service standard that we want and expect.
Well, that's all. So now, did I hear you say that your compensation is tied to some of these things, like the reviews, turn downs, and time?
Yes. So not necessarily the mortgage loan officers themselves. It's more the team members that that facilitate the loan after the loan is originated. Kind of in our business, the loan originators we call them the architects. They are the architects of the loan. They're the ones that find the best program for our particular clients. They're the ones that obviously make sure that they're qualified and fill out the application and whatnot. But after that, after the the plans, if you will, are drawn up, at that point the loan moves on to its next phase in the life cycle. And like I said, there's a whole set of different team members that take care of that loan, just like an assembly line, all the way to the finish line. And so yes, their compensation is very heavily tied around their turn times, their pull-through ratios at each of those different steps. And if they're good and positive, obviously they're bonused accordingly. If they're not, then we do whatever action is necessary to coach that particular team member and identify what might be the specific items that they're struggling on or struggling with. So,
wow, that's amazing. Listen, when we came up with this idea for doing a broker roundtable or broker edition, we reached out to PennyMac Broker Direct and said, hey, can you give us a short list of some of your favorite brokers? The brokers actually have an unbelievable production, have really good systems, have just some good outreach in the community, and there's no question you're checking all the boxes. And so we've talked through the roof, your Sims through the roof. The one thing actually I haven't talked about is community. I mean, so one of the things that you are an expert in. You've actually been a top-ranking VA loan originator. You have actually some top-ranking VA loan originators work. So what actually led to the decision to work with veterans, both active and veteran borrowers?
Yeah, so with the company that I first worked with, and I was with that same company, the same company that I started with when I was 17. I was with them all the way till I was like 35 years old. So 17 to 35, I was with them that whole tenure. And so what's interesting is well, not quite 35. It would have been more like 34. Getting old apparently. That company specialized in VA loans. So from the very beginning, when I was 17, they specialized in VA loans, and more specifically, they really loved the VA IRRRL program, the interest rate reduction refinance loan. And so I kind of for lack of a better word, I was born into the VA loan industry. But as I learned more and more about that particular loan compared to the other loan types, I'm like, wow, what a better, there is no better loan, in my opinion, than the VA loan. They get the very best refinance program with the VA IRRRL, no appraisal, no inspections, no out-of-pocket costs, no verification of income or assets required. Like how neat is that we can help, serve the men and women of our country that put their life on the line and give them such an amazing benefit, distribute an amazing benefit to them to help them save hundreds, thousands, tens of thousands, even hundreds of thousands of dollars over the life of their loan, and put them into a better financial position. It went away for a little bit, but it's back, 100% financing on cash out refinances. That's something the VA allows. And so, there is no other loan out there that really offers that and still offers it with no mortgage insurance and great low rates. And then of course your purchase transactions, it is a true zero down payment loan transaction with no mortgage insurance, no hits to the interest rate, they can finance some of the closing cost into this, so you can truly structure a purchase transaction. So these men and women get to, purchase a property with, absolutely zero out of pocket. I always thought that was so amazing and so fantastic that I can take someone who served in the military and they literally don't need to have any assets, no reserves, no assets. Yeah. They can even have less than perfect credit. They can have a higher debt to income ratio, and I can help them achieve the dream of home ownership. So as I went through my career, could I have switched to different loan types and kind of specialize, and switched my niche or specialty? Absolutely. Yeah. But I just loved serving veterans, and it's kind of like I got to distribute the very best loan program of them all. And, so I really gravitated to that. I have family who served in the military. So that was, that's something that was kind of icing on the cake for me. But, it was really just about, the biggest thing was, just distributing the very best loan program of all to those men and women that deserve it most.
Yeah, they're entitled to it. They've risked our lives for us. The least we could do is amongst many other things, but they should have access to the greatest mortgage program. But interestingly enough, the industry loves it too because it's such low default rates. Veterans do not let their loans go into default. So I think that is just awesome. So. At what point did you realize that the mortgage broker kind of business model was the best model for your organization and for veterans?
So the company that I worked for before, they started out as a broker, and then they switched over to we switched over to being a kind of a retail branch of a larger lender. And then we eventually broke out a little bit and got our own warehouse lines and became a banker ourselves. And one of the frustrating things about working in that world for, all the way up to, essentially the end of 2016, I founded Simplify Home Loans at essentially the beginning of 2017. One of the things that was always frustrating is I didn't like my lack of choice. I didn't like my lack of option. I didn't like the fact that there was a lack of choice and a lack of options, and that, you know, there was no way to shop really as a lender. I really didn't have that luxury of like, oh, you don't like the rates that I'm offering here? Well, tough. That's what I offer. I guess I can go to my manager and get a pricing concession, and maybe that might work and maybe it won't, but I don't really have the choice, the power of choice. As an originator, especially, I was kind of, my hands were tied, so to speak. And being you know, what was very appealing about being a broker was just the sheer fact that I can take a client, really look at their situation, and I can go to any number of different lenders to find them the very best loan terms. I can find that for them. I am essentially a shopping service for them that they don't have to pay for, because, you know, most brokers' transactions are set up as lender paid compensation. The client doesn't have to pay us anything. And so, you know, that was very, very appealing to me. The fact that not only could I help people, not only from a qualification standpoint, that I wasn't able to help as a retail loan officer, but the fact that in almost every case, I was able to find much, much better pricing than when I was going, you know, versus a retail loan officer. I mean, in some cases, pricing is tens of thousands of dollars. That's what it means to the customer. Tens of thousands of dollars better in pricing by originating that loan as a broker versus as a retail lender. And so that was one of the big things on why I wanted to make the jump from being a retail loan officer for a lender to being a broker, is, you know, all of the reasons that I mentioned.
Yeah, that's fantastic. No, it's great model, giving you the choice to choose. You know, listen, you want to get the best deal for your borrower. You're locked into one company. You know, you're getting the best deal that you can have as a broker. You're getting the best deal available to them. So, like, what makes you pick wholesale lenders? Like, what allows you to say, hey, you know, something, I'm willing to consider a new wholesale lender. Like, what would lead you to consider actually, you know, working with someone? Like, you know, when you started working with PennyMac, I'm sure at some point, you know, you said, hey, these guys are great, I like them, but what is that thing that drives you to say, I'm willing to actually potentially upset your manufacturing process, because that's what you have here, with trying a new wholesale lender?
So, you know, a big thing, you know, we do try to keep an eye on reviews online. You know, that's something that's important to us. We don't want to necessarily send our loans to lenders that, you know, are, I don't want to use the word mistreat, but they're not going to handle our clients, because at the end of the day, it's our reputation. You know, they're not necessarily going to remember the wholesale lender that, you know, that funded their loan, right? They're going to remember Jacob Deegan. They're going to remember the Simplify Home Loans. That's who the relationship is being built around. So, you know, online presence, online reviews is a big one. You know, obviously pricing is always going to be a big deal to us as brokers. You know, that's a big role we play in this industry, is making sure that giving our borrowers a very competitive price, you know, versus what else is out there. So price is definitely a huge piece of that. And then, you know, also it's the manufacturing system / process of the wholesale lender themselves. You know, how is their website to work with? How is their, you know, how is it, you know, how easy is it to register, lock, and disclose loans with them? How is their online portal and user friendly? Is it for our different team members that, you know, are going to be very involved with the wholesale lender, obviously, in you know, in getting this loan to the finish line? How easy is their website to navigate? And when conditions are issued or approval is issued, you know, how easy is that to find and upload those items to quickly get them cleared? Turn times, huge. I know, you know, with COVID and the explosion of growth that, you know, was the mortgage industry because volume, because, you know, interest rates did what they did. Turn times were huge, and there were times where, you know, lenders were really getting bad on their turn times, and they didn't have a plan. They didn't have any sort of, you know, just like, they threw their hands up. This is the way that it is, you know, hopefully things settle down. And it's like, no, you know, we're relying on you to get these loans, you know, to help us get these clients to the finish line. And so turn times is a huge one. And then, you know, your account executive, honestly, you know, this is a very relationship driven business. And, you know, so how friendly is your account executive? How, the biggest thing for me, friendly is obviously nice, but the big thing is problem solving. How well does your account executive help you problem solve? Are they very passive to it and like, oh, I've got this account manager, deal with them, and you're having to email 10 different people to solve a problem? Or do you have an account manager that is really vested in your success as a broker and will kind of, if you present a problem, you have confidence in them that they're like, no, I will get with the right people. I will get with my account manager. I will get with my manager. I will escalate this 10 times for you if I need to get this resolved. And obviously that is a huge, a huge player factor, if you will, of who we decide to work with and who we decide to send loans to. Because honestly, Andrew, a broker can sign up with a lender but not send them any loans. And that doesn't do the lender any good. The wholesale lender needs to cultivate that relationship in the proper ways. I've demonstrated or explained a few, ways that, we make that decision to send the highest amount of volume to our top preferred lenders.
Oh, that's fantastic. Listen, you have that relationship. It's so interesting to hear, someone who's very focused on technology, on process, to talk about actually how important still the relationship is. And I think it's finding the right lenders that have almost like a partnership approach that help actually to complement your manufacturing process. Now I gotta ask. Now we talked about this before we went live, and if you're not okay with saying it, I won't hold this against you. But Kate, would you mind sharing us the fastest you've ever closed a loan? Now, full disclosure, this is everything being perfect. This is not actually how that you've done this many times. But what is the fastest that you've manufactured a loan?
10 days. And that's actually a refinance. So it's actually, depending on when you call the finish line, but, a refinance 10 days from, the point of application being completed to the loan being funded. So
funded, and, so that's just phenomenal. That is just, and I'm telling you, I talked to a lot of very tech-focused mortgage bankers, and they're not able to claim 10 days. And these are companies with a lot more resources. So this is just a phenomenal story. Jake, really, I really appreciate you coming to sharing your story with us. I think really, I can't thank PennyMac Broker Direct. Thank you guys so much for sponsoring the Mortgage Leadership Outlook Broker Edition, connecting us, to Jake, so we could hear Jake's amazing story. Jake, anything you want to say in closing?
To the other loan officers and mortgage brokers out there, I mean, what a fantastic business we work in, right? Like, we get to deal with the some of the largest transactions of people's lives, but every single day we are changing lives, and it's just, I am so proud to be in this industry and the work that we do every single day. I'm proud to be here alongside you guys, and Andrew, thank you so much for giving me the opportunity to share a little bit of of my knowledge and my story, and if there's ever a time that you want to reach out to me, please feel free to do so.
Fantastic. Well, Jake, thank you so much. And thank you for joining us for another Mortgage Leadership Outlook. As we go into the broker edition, we've got 3 more episodes coming up. Next week is going to be Christian Griffin. He's going to be joining us next week. So again, thank you for joining us. We come to you every Wednesday, 4 o'clock East Coast time, 1 o'clock Pacific. And thanks again to PennyMac Broker Direct for sponsoring the broker edition. Everyone, stay safe and have a great month.
Thank you.